Welcome back to the Dividend Diplomats YouTube channel, everybody. Lanny and Bert, you know us by now, the Dividend Diplomats. Guys, we're making some moves in my wife's portfolio here. We're buying a stock that we talked about wanting to build a position in on this channel just a few weeks ago, and we're also cleaning up some other positions in our portfolio along the way. So get ready, get hyped. We're going to be building a position in this 3.2% yielding stock with a double-digit percent dividend growth rate.
Guys, before we do, smash the subscribe button, give us a nice thumbs up. As Bert said it, he's cleaning up some positions in his portfolio. Typically, you might do this if you own very few shares with no real plans to add to it further. Sometimes you own shares from spinoffs that you think, hey, maybe they'll pop, maybe they'll 10x. Sometimes you own shares just by a quick drop, but you don't really go hammer on it, and you only throw $100, maybe $150 at it. You don't do anything else. So you kind of want to get rid of some smaller positions that might better complement anyways your overall portfolio with the combination of dividend yield and dividend growth. And why do we do that? Because Bert and I both are trying to get to financial freedom. So Bert, I know that's got to be the root, is how do I get more juice out of these lemons?
Yeah, and truth be told, the stock in the sector we're picking in, it's not the highest yielding stock in the sector. In fact, we're going to get, when I tell you the company, we're going to hear a lot of other ones that say, did you check this one? Did you check this one? Did you check this one? Understand, and we'll get into why I picked this one a little bit later. But what I'm doing is I want to focus on some quality dividend stock after receiving some dividend cuts, after seeing some noise in the interest rate market, some noise at some other stocks and news. I wanted to focus on just building a quality position. And that's really the core of it. To your point, add income in a quality stock, quality investment that I can feel comfortable with and I don't have to worry about.
You don't want to worry about it. You don't want to worry about it at all.
Nope.
And I would say maybe one of the stocks you probably had no idea how they were doing. The other stock you probably have a good visual with how they're doing. Yep. And the other stock that you may have dissolved, you probably can taste how they're doing.
Yeah, that's right. So let's jump right in. Let's tell you about the company and we'll tell you about the ones we're getting rid of and the overall income impact. Drum roll, please. We're buying American Towers, ticker symbol AMT. That's the REIT that we talked about. As you saw, we did a video on it just a few weeks ago. Their price is down. They're below $200 per share. They're down 10% year to date, 23% over the last 52 weeks. So much so that this lower yielding REIT is now yielding above 3%, solidly above 3%. In fact, they're at 3.24% at the time we're recording this video.
Wow. I mean, 3.24%. And I think we covered it in the REIT video. So guys, check that out when Bert was looking at REITs.
Yeah.
And you guys remember in the earlier video, maybe on, what is it, Tuesday? Don't want to go down the REIT hole. Appreciate the commenters for calling that comment out by Bert. Well, Bert's down the REIT hole and he is deep, guys. He is real deep. He ate some colon blow and he's deep in the REIT hole right now.
You really have to lean into that one, don't you?
Leaning into it. So
yeah, we're not going away from that. We're leaning right in. So some of the reasons why I liked AMT, just a quick recap. We're not going to spend too much time talking about it. Overall, I love the sector that they're in. They own over 200,000 cell towers worldwide. They're not just in the US, they are worldwide. And where's the world heading? The world's heading
to space.
Yes. Yeah. And they are, I mean, they are into space. American Towers isn't, but there are a lot of companies, we're talking about you, Elon Musk, that are driving towards space with SpaceX. But so they're trying to get ahead of the 5G. They acquired a company, a data center, data security. So they're diversifying away from there. They're really leaning into mobile connectivity and just being the one-stop shop. And I just like that sector overall. One of the other things I like about them too is they're managing their balance sheet well. They're focused on paying down their debt. Even though they have a lot of lower interest yielding debt, they're still focused on paying it down. I think it decreased $5 billion year over year, as we saw in the last video. So they're managing well. And that's, in my mind, one of the things, the biggest risk for REITs going forward and why I'm not going ham on the higher yielding REITs at the moment. With interest rates rising, you could see some pressures. Interest expense starts to increase. There could be some pressure on that dividend. So I'm playing it safe in the REIT sector today by finding a company that's paying down their debt, has lower yielding interest, and doesn't have the highest yield.
But hey, I mean, again, a lot of, like you said, a lot of positive signs there. Love that they're paying down debt during a high interest rate environment. Love that they're trying to diversify revenue streams by owning data centers.
Mhm.
And you love a dominant player as the other telecommunication providers. Yes, we're calling you Verizon, AT&T, T-Mobile, and others, obviously across the world, that are fighting for those towers, this tower space, leasing the space. Um, they're trying to really be a big player, and I don't see how they won't. I mean, Bert, this is $100 billion by market cap company, so I could
Yeah.
definitely see why you want to own a growing income stream from AMT. But
Yeah.
you had mentioned earlier you have a goal. What are some of your goals with AMT?
Yeah. So part of the reason why I'm selling some of these companies, I don't want small positions in my portfolio anymore. You hit it on the head earlier. Some of these positions that you just aren't large enough to really do anything for you. And we'll get to that. You'll see the amounts that I sold off and the companies I paired off. I don't want that to be the case with AMT. I want to get to at least 10 shares of AMT, which would be almost 2,000 market value in today's price. And obviously I'd be happy to keep going and adding more, but I want to make sure for me to at least be happy with the position I built, it's going to be 10 shares. And on top of that, I want to at least get to 5 before their upcoming ex-dividend date on April 13th. So in a couple of weeks here, I want to at least buy 5 shares so I can get a pretty nice dividend there in April. So those are my longer term goals, 10 shares, shorter term 5 in the next couple of weeks.
I would say that's a pretty nice goal.
Mm-hmm.
And not overly aggressive, because you buy stocks throughout the week. You know about your new plan with SEHD, buying the SEHD 2 shares every single week. Bert's in the game, baby. Everybody show some love for the SEHD, but you've always been buying other stocks. So I don't see why you couldn't get to the 10 shares. But you said you were also, again, as we spoke in the beginning, you might be dissolving some of these small shares of 3 companies possibly.
Yep. So yeah, let's go there. So where do I stand on AMT today? I'll start there. We've managed to buy so far 3.196 shares at an average cost basis of $190.91. Our cost basis in this is $610.15. So we've gotten a combination of me investing new dollars, but I've also liquidated 2 positions already. One of the companies I've liquidated is Kyndryl, ticker symbol KD. That was, for anyone that doesn't know, that was from the IBM spinoff a few years ago. And to your point, Lanny, we talked about small positions. I only owned 2 shares. So I only owned 2 shares and I was able to get, I don't know, like $28 back from Kyndryl that I was able just to fold into the AMT purchase. So let's think about that. If KMD would have 10x'd, I still would have only had $200. Like there's not much I would have been able to do at that position. So the growth wasn't there. So why not just fold that into AMT, which I'm going to build into a larger position. We also sold TJ Maxx, ticker symbol TJX. This was the other scenario that you talked about in the beginning of this video, where I had all the intentions of growing my TJ Maxx position for my wife, but the price popped and it wasn't undervalued anymore. So I waited, and you know what? It just never happened. The price never came down, which is a good thing. So we were able to sell 2.074 shares of TJ Maxx, bring back $155.14, and also fold that into the 3 shares that we have of AMT. So between selling KD and TJX, we were able to nearly buy 1 full share of AMT in that position. So I put about 2 shares of my own cash into this position for my wife. And I shouldn't say my cash, our cash is the right way to say it because it's both of ours. And then we've taken those 2 sales and bought another share of AMT. That's how we've gotten the 3 shares so far today.
3 shares so far. You sold off some stock.
Mm-hmm.
But wait,
there's more. There is a company we're going to sell that we haven't done it yet. What company is that, Lanny? I want you to do the announcement, Lanny. I feel like you would do this justice because this is probably close. This is the one that's close to your hometown, the birthplace of Lanny.
Yeah, it's close enough, right?
Closer than me.
Yeah, close enough, guys. So with a name like Smuckers, it has to be good. We're talking SJM. Bert owns over 2 shares of Smuckers, which again is probably around over $300. Bert, correct me if I'm wrong.
$332 at the time we're recording this video.
So that alone would acquire at least another almost 2 shares.
Yeah. So that's what we're gonna do is we're gonna sell that. My wife owns 2 shares in her traditional account, 21 shares in a different account. So we're not liquidating from Smuckers altogether. We're just liquidating that tiny little sliver that's not really doing much in the traditional. It's not producing any meaningful dividends from that alone. We're going to move that into AMT as well. I haven't done it yet. We're going to make sure that gets done before the ex-dividend date here. So that's going to be obviously a big boost to get us very close to 5 shares before April 13th.
I mean, now, Bert, the question I have for you is by selling these shares, how much income are you losing? And then how much do you stand to gain?
Okay, now that's a great question, Lanny. So right now with AMT, with our 3.196 shares, we are getting $19.94 of dividend income. TJ Maxx, we are getting a whopping $2.76 annually. So we're going
$2, not 1, 2.
Not 3 though, just $2.76.
But with one more drip, you might get to 3.
Yeah, and that's why we got rid of the position. Look, that really was not doing anything for us, clearly. And then we're selling Kendrill, and Kendrill has what, a whopping $0 dividend, Lanny? Is that right?
For now.
For now, maybe not in the future. Okay, so let's get 1% yield on that $28 investment that I had in Kendrill. This big dollars right there. So we're not losing anything. Now, where are we at today before the Smuckers move with the dividend income? We've picked up $19.94 from AMT. We've cut $2.76 from TJ Maxx. So based on these moves alone, we've picked up $17.18 without doing the Smuckers piece of this. When we do sell Smuckers and move it into AMT, we're going to pick up an extra $2.08 of dividend income because there's a slightly higher yield from AMT than there is Smuckers. That'll add $2 more. So then we will be at a net positive of $19.27 by moving all 3 of these positions and continuing to build this AMT spot.
All right. So in a nutshell, by selling, once you sell off Smuckers, you sold off Kendrill, you sold TJ Maxx, all said and done, you'll be a net positive forward income, $19.27 estimating.
That's absolutely right. So that's a nice little pickup there for not doing too much, moving some cash around and just putting a little bit in.
Now, was this in your taxable account?
So it's a great question. The holdings that we're selling were in the taxable, but we're buying AMT in our Roth. So I moved the money from the taxable into the Roth, and then we're just going to grow AMT in there because we want the tax advantages of the tax-free growth from having the REIT in our Roth IRA.
You sly dog, you.
Yeah, we'll see how sly this move is. I mean, overall, it's a net positive. We like AMT. There's still, the equity markets are crazy right now. It's a lot of fun. There are a lot of great stocks to go out there. I could keep adding to other positions, but I'm choosing to build a position in AMT and start building this. We're going to scratch that REIT itch that we had for a while of wanting to build our REIT allocation. We're getting a great stock. Yield's not the highest. This isn't the cheapest stock from a valuation standpoint, but 3.24% yield with a double-digit dividend growth rate. We'll take that. That's great.
Down 23% in 52 weeks. Again, 3.25 yield, like you said, 10, 15, 17, almost 18% dividend growth.
Yeah. So, I mean, again, there are plenty of REITs that have higher yield. I'm playing it safe right now. We're just taking the easy hitter. We're buying a great company, a Fortune 500 company. We're very happy. It's going to be a set it and forget it position when we get to at least 10, and we're going to keep acquiring more along the way. I'm very excited to build up this AMT position for my wife.
Guys, let us know what you think of Bert's moves about saying goodbye to his small positions of Kendrill, Smuckers, and TJ Maxx. Let us know if you own AMT as well. If you've been adding to AMT as they've been beat up about 10% this year, let us know in the comments. And if you haven't already, definitely subscribe to this channel and give this video a nice thumbs up.
If you're not with us, everybody, you're against us.
Guys, that was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.